Good morning. Welcome to the International Arbitrage. Today we're going to talk about group captive insurance. We've talked a lot about captive insurance and how that can benefit international owner managed companies, attract um, investment from U.S. investors that are not institutions, from especially for high net worth investors that want to reduce their exposure to the stock market, which some people allege is somewhat slanted a little bit, and people want to acquire some exposure to real business, real operational risk. But of course, in doing that, there's a number of concerns. One in particular is, the compliance risk, potential for fraud, and then there's the fact that some businesses, some very profitable and high and very economically great businesses doing say 20, $30 million a year. You might be, your insurance costs, your economic insurance costs for a captive insurance company, your premiums might be 500,000 a year, 750,000 a year, and so you're thinking, well, is it worth paying say 50, 60, $80,000 a year to run a captive insurance company? I might as well just continue, paying my insurance company. So when you have insurance premium for companies or the managed companies that have, you know, insurance premiums of 3, 4, $500,000 a year, um, there are very viable options. What you can do is set up join a group captive insurance company. Now, um, there are ways to do this, but we're going to talk mainly about the challenges that people would intuitively see in that, and then then how to get it, overcome those challenges. But just a little bit more why captive insurance captive by having your self insurance company or captive insurance company that you own. You can save on your insurance premiums. You're not paying a large insurance carrier company. You're not paying them in your insurance premium just because their overheads are high. They have large marketing expenses, bonus and executive salaries. If you were to take away all those things, your insurance costs would actually be a lot less. But insurance companies, in order to operate, they have to meet their overheads, and you, the customer, has to pay for that. And so you can be reduced or avoid exposure to all those unnecessary costs by having your own insurance company. By having your own insurance company when you're doing international business and that's outside of the U.S., you can basically reduce the risk and the cost of capital and the perception of risk to your U.S. Potential U.S. investors and their advisors by having a captive insurance company. So now that having a captive insurance company vastly increases the potential investment, the potential for fundraising from U.S. investors, because U.S. investors are very conservative when it comes to non-U.S. investments. So now that we've talked a little bit, and see previous videos for more detailed explanations of the why of a captive insurance company. So we'll talk a little bit more today about group captive insurance companies. So you're an owner manager, family-owned business. You're looking at the cost benefit analysis. You've got insurance premiums of $400,000 a year. It's like, why would I spend $100,000 a year running my own captive when I could just save time and just keep doing it with my current insurance company? So it might not be worth it for you. Well, what you can do is you can join a group captive. A group captive is basically a group of business owners And so if you have 10 people who each have $400,000 of premium per year, um, that's $4 million of premiums. And so now the cost of running the captive insurance company is shared amongst those 10 people, right? But any family owned business or owner, manager, entrepreneur knows, well, I don't know 10 people and I don't have the time to go out into the world and find 10 trustworthy people to work with. So this can be dealt with in a number of ways. One, there is, which we are working with, the Miami Beach Risk Management Institute in Miami, where there are members of the Miami Beach Risk Management Institute who, it's an educational association. The point of it is to educate its members about captive insurance and group captive insurance. And so, you can join an organization like that, get white papers, get information about how group captive insurance works, so you can get written information first. And then you can go to a seminar and you can meet people there who are like you, are similarly interested in captive insurance, but they also may have a cost benefit issue. Now, in an association like this, what the association can do is it can carry out independently due diligence, assuming everybody agrees or people agree. It can have a program where people basically make themselves available for joining a captive, subject to having had due diligence done on them. And so therefore, you don't have to pay for that due diligence. And there's a bunch of people that you already know are interested, so you don't have to incur all that time and effort and expense away from your business looking for like-minded people. You've found a bunch of like-minded people. The only thing you have to do now is spend a little bit of time getting to know them, and then deciding if you want to do this or not. Group captives work because group captive insurance companies made up of different owners of different businesses are you can say, for instance, put the shares of the captive insurance company in a trust, and the trustee and the service provider will oversee the operation and running of the captive insurance company. The captive insurance companies, group captive insurance companies, all captive insurance companies are run by captive management companies. Captive management companies are regulated, licensed and regulated, so they have standards to work to. So that's one set of protection. And then trustee, if you put the captive insurance on the trust, then the trustee has a fiduciary obligation to look out for the best interests of all of its beneficiaries, and you would be one. So there are many ways to get over the unknown, avoid having to spend your own money, vast amounts of time looking for like-minded people. And then also there's a lot of resources that basically are just there to help you work out if this is something that you want to do or not. So for those who have small, relatively small, insurance premium payments, group captive insurance is the way to go for you. At the end of the day, you will have accumulated in 5 to 10 years a significant, as a small business owner, a significant amount of accumulated capital and investment income is going to be of great value to international business owner, manager, because you can use that as collateral. You can do loans from it. There are many ways to use captive insurance companies and to finance your business as working capital and different things. So you can use your shares in the captive insurance company to remunerate some of your key executives, give them a stake without giving them voting rights in the main business, which might be a family business. So a captive insurance company is a way to kind of cut them in, but not in a way that interferes with the legacy that you're building for your family, for your children, for your wife. But of course, you still need to incentivize 1 or 2 or 3 key personnel that you might keep with you. So, group captive insurance companies are really, if you use something like the Miami Beach Risk Management Institute, you can find like-minded people, save all that time of running around, finding people, incurring costs, trying to look for like-minded people. As a first step, that's always the biggest challenge, and so you can educate yourself, and then take it from there. Make it your own mind. But it definitely is possible to do this, viable to do this. When you have 10 people in a group captive, the shares, the cost of running it are divided by 10, and so the economics are in play for you immediately. It's just like wholesaling or any other normal distributive type business model. So that's just a short note on group captive insurance companies for international business owners or families who might want to consider boosting their ability to raise funds to reduce risk and accumulate capital and grow faster. Um, that's it for now on the international arbitrage. I'll come back on some other points regarding captive insurance shortly. Cheers.